Hey traders, checking in on the stock market today. Broader market bulls keeping their control. The growth names stood out today for their strength. I personally got back my flow after 3 days of stuttering around to start this week. And it was embracing my bearish lean, and I traded some bear names. And granted, the broader market was not going in that direction, but those trades worked out. We'll check in on them, and we'll see a good trade setup that I'm watching into tomorrow. So we'll start off with trade review, and then we'll go through our regular technical analysis here, and I'll talk about the setup I'm watching tomorrow at the end. But looking at AMD, so in the video yesterday, I mentioned how I was in a short swing position, looking for a daily consolidation to begin, looking for the volume climax, and honestly, in hindsight, just thinking about, okay, why was I looking to be in this trade? Because I haven't traded AMD in as long as I can remember, many months. And it was really this one post. So shout out to Timber in the chat room. AMD daily volume climax pretty much guaranteed at this point. He said that at 1 p.m. yesterday, and that's what had me start to scout a bearish entry. And then that was, he posted it right here. We got the bull break of the 15-minute time frame with a lack of follow through, and that's where I made my top fishing entry with my stop at 121 once we started pulling back from that bull break. So the lower open this morning was a good sign. And then we had first 5-minute oversold conditions happen very quickly. The first 5-minute candle, that RSI dropped real low when we were down at the low of that candle. And then we bounced up significantly. So I have my swing trading position, but then I day traded as well. And I made a bearish entry on this bounce back when I saw this little double top. The high of the day was 117.64. We broke it by 4 pennies with no follow through, and then dropped back down, and it wasn't a huge win. I think I flipped a position for $1 drop. I didn't hold it all the way through. And again, it was just looking to lock in a small, quick little win, knowing that if we did break the low of the day and follow through, that it would be my swing position that would be benefiting from it. And you'll notice the two things that I just said were breaks with lack of follow through. And that is a trading aspect that has been added to my tool belt a lot in the last couple of years. And number one, it's wedges. Because again, wedges are breaks with no follow through, but then just getting more comfortable. Once I got good at wedges, I got comfortable recognizing breaks with a lack of follow through, essentially fake outs, and looked to utilize them as a part of my trading strategy. So from there on, AMD, just watch this beautiful 5-minute downtrend, and it was just noticing, okay, we have a bearish correlation with QQQ and the broader market, and any pullback in the broader market is going to help this drop. And in the end, we didn't really pull back much at all in the broader market, and this was just exhausted bulls that were due for consolidation. And I did exit a little bit more here. Half of my swing position, I exited just above 114, and then holding the rest into tomorrow. And I will exit tomorrow because now we're zooming out. We're scouting a daily higher low with tons of space for it to form. At this point from the high, we've already pulled back 9%, and we're watching for the back burner first hourly oversold conditions. If we see weakness tomorrow on AMD, I'll cover in hourly oversold conditions, and I may even go long looking for a bounce play. It's a back burner, first hourly oversold, coming off of a massive all-time high run, and we know those generally are higher probability trades. So that's one trade setup to be watching for tomorrow. The other trade that I took today, this was maybe a 2-day maker today, and on MRNA, looking short. So the reason I was looking short, again, the daily time frame just way overextended, and the only time I was short a blue sky bull is when I have a very clear stop level nearby, and I have my risk very clearly defined. Because the last thing I'm going to do is just scale in to a blue sky breakout, and next thing I know, I'm down a 2-week maker, and I'm completely out of control of the trade. So I watched this bull move, broke the high of yesterday, and I started watching this consolidation first thing. I said, all right, I'm keeping an eye out to see if daily consolidation begins. And I'm just now noticing that those two trades are both blue sky breakout names into consolidation. I don't think I've ever done that before. Back-to-back trades shorting blue sky names. But it was a blue sky breakout, and then we saw this much pullback on the 2-minute time frame. And in the chat room I said, aggressive bears are scouting a 2-minute lower high to top fish. And then we kept pulling back. I said, okay, well, I'm going to zoom out now because I like the 5-minute for clarity. I don't need to be on the 2-minute anymore, where I'm looking for a 5-minute higher low, and the aggressive bears are scouting a 5-minute lower high for that entry. So we pulled back, EMA 12 support holding, 5-minute inside bar. At this point in time, there is absolutely no indication that our top is set. And that's why it's only aggressive bears looking for an entry. And the only reason an aggressive bear is looking for an entry is saying, okay, the daily time frame is very overextended and looking for a temporary top to be set. So on this bounce, in my mind, I'm saying, okay, if 435 breaks, I'm making a bearish entry. If we didn't break 435 there, I would have just watched this pullback and I wouldn't have had any piece of it. Why did I have to wait for the break of 435? Because after that level, with the position size that I had in my head of what I'm going to do here, that was when the trade became good risk and good reward. If I'm making a bearish entry at 430 and my stop's at 445, that's way too much risk. That's $15 of risk, and I would need pretty much a 10% drop if it was going to be worthwhile from there. So once we get to 435, I make my bearish entry. I got filled about 436. We went up to 438s. So filled 436, stop at 445.01, and just let it play out. We confirmed the 5-minute downtrend, exited 1/3 of my position on that bear break, another leg down, exited the second and third thirds fairly quickly from there. And it was also the first time I've traded MRNA, at least recently. The first time I've ever shorted MRNA. I played it long before. And the volatility, again, was a reminder, oh yeah, this is a really volatile name. We just pulled back 9% in less than an hour. So it was a big win at that point, a 3-day maker plus. And so I just wanted to lock it in and anticipated the potential that the bulls were going to hold the low of the day. I was watching for a 15-minute higher low at that point. And I was watching the 2-minute potential falling wedge. So I had this drawn out. And we dropped down here, and I said, when we started bouncing around right here, I said, that was when I covered everything. I said, I'm tempted to go long right now, but I'm not going to do it. And I was planning on leaving the computer very shortly. And then on this next leg down, with the low of the day 403, and we bounced right at my support line, I said, all right, I'm going to take it long for a flip. So bought 408s, and then just sold right at this resistance line in the 413s. So that was just another little half-day maker flip in the other direction. And then the bulls did have a nice move off that low of the day where aggressive bulls could have bottom fished. But at that point, I did leave the computer. So nice to be trading it in both directions and didn't leave too much on the table as a short because we never broke that low of the day. We just traded sideways and then closed fairly strong. Not fairly strong, but closed keeping the bulls in control overall. So that was a really nice trade. And once I made that short, I could just feel the flow. It was just there. And the reason, I mean, it's as simple as it is. The reason I had my flow today is I wasn't live streaming and I was just completely focused on 2 or 3 things as opposed to 50 things and responding to questions. And it's just, again, I'm a much better trader. I'm much better at executing trades when I'm not live streaming. I can call out trades when I'm live streaming, but as far as myself physically opening the orders and filling them out and establishing the game plan, it's a lot harder for me. It can be done, but it was just very nice to have that familiar, okay, I'm back. Because the last 3 days I didn't have that. And the last 3 days, looking at my account, here's my account on the year, and you can see this is me going away last week, and then the first 3 days this week doing nothing. So zooming in, first 3 days, that's me away, and that shows good balance as far as, I have open swing positions, both long and short, and they are very balanced. As you can see, I didn't place any trades at that point, or those days, I should say. And then came back, and that was a bit less than a day loser, a bit less than a day maker, right back where I am, flat. And now after today, I'm going to be up closer towards that gray line. So just honestly, a sigh of relief for me personally, because now, after 3 days of, okay, I don't have my flow, I don't feel it, I'm asking myself, did I just end my really good streak on the year because I went away and took my eye off the ball? But fortunately, not the case. And while we're on the topic, before we get into the regular technical analysis, we'll do it now. Hood is the next trade that I'm watching. I would love a gap down open tomorrow. Very weak close. The bears just absolutely pummeled the price into the end of the day, which is what I wanted to see. At about 3 p.m., I'm saying, crush it into the close and gap down open to hourly oversold. That is what I would love to see tomorrow, and I will be buying a gap down open if we get it to play the hourly oversold bounce. So both AMD and Hood are hourly back burner trades to be keeping an eye on. There's a gap to fill at 48.59 on Hood. Would love to gap down, fill it, hourly oversold. Let's go for a nice 10% bounce. So we'll see how it shapes up. If we open higher, completely different trade that's off the table, and we'll have to take it from there. I may not trade it if that's the case, but I want to gap down. S&P 500, 12-hour time frame testing our resistance on the verge of all-time highs. And again, yesterday talking about my gut bear lean. So the trades that made my day today were both bearish, and they both would have benefited if we saw any broader market weakness, but not required for those trades to work out. So maybe that just means I take more focus on bearish trades in the near term, which can still work as long as it's the right individual names. But if we get a new all-time high, then the bulls affirm their complete control. The most important level for me on SPY is this double bottom now at 435.99 and 436.10. That double bottom is clear, and we could just make a simple statement. If that level is holding, the bulls have absolute complete control. It's very simple. So all-time highs on the table to end the week tomorrow. We'll see if the bulls can pull it off. The NASDAQ is at all-time highs. So now all these lines I can erase because they're no longer any meaning. We have broken resistance. But the one thing I am watching here is this uptrending resistance line. And again, it is a potential rising wedge. I'm not going to take my eye off this unless we get a clear bull break above it. But that resistance level is still a good bit away. You know, we could go another 1 or 2% before we get there. 1% plus. So I'm going to keep an eye on that. So again, I'm not shorting the broader market. I do have some bearish positions as hedges because I have SPY long and I have metals long and I have MSOS long, small position. So again, as you saw, things pretty much flat. So what's the point of even having those swing positions? I don't know. Now, they worked out in the sense that that SPY position's almost up 100% at this point from the COVID drop. And once we see monthly consolidation in SPY, I will be a lot more comfortable long. But again, any monthly chart just that looks like this, and it was the same thing with Bitcoin. You know, Bitcoin on the weekly time frame, in the monthly, we started getting up to the upper 40s, and I said, I'm no longer comfortable. I was locking in my profit and then just patiently waiting. And I missed the last leg to the upside, absolutely. You know, I was probably all out of the core of my position by 48, 49. So we didn't see a huge move, but we chopped around and I left some money on the table. But then once that drop happened, I didn't give a dollar back. And I was ready to play the bounces. And I actually made more money here on these bounces than I would have made if I kept my positions up here. And that's just me and what I'm comfortable with because I love those oversold bounces. And when things get extended to a certain point, I just get into lock it in mode. And SPY is at that point for me. XLF, solid day, close up at the high. We've been battling these low 37s for a long time now. And if we get over 37.19 tomorrow, it'll be a more convincing break. And at this point, we've just got our low, high, built a little base of support down here, higher high with no follow through, held support again, trying to get another higher high. And the good sign for the broader market is XLV, which has been a lead major bull, is consolidating on the daily now, while XLF is now picking up the slack. So SPY had a solid day today, even though XLV was down a good bit because the other sectors offset it. And again, it's just rotation, taking turns. XLV did have a nice back burner, first hourly oversold. Again, you don't see it here, but I can just say, okay, well, where the candle closed, the hourly RSI was 34. So I know that when we were at the low of that candle, that hourly RSI was right at about 31 or 30. And if I really want to know exactly what it was, I go into the settings and I change the source from close to low. And that shows me what it dropped down to at the low of that candle, which was 33. That doesn't seem right, but I guess it is. I don't know about that. Wish I was watching it live. Then I would know. Biotech sector. No, we're still on XLF. So XLF bulls break 37.19 and they're strong. XLV bulls need to change the hourly trend back in their favor. So wherever this bounce tops out, have to hold the low of today and then follow through, and that hourly trend change would set the daily high or low. And again, hourly, my favorite setup for a bounce on a bull market is first hourly oversold conditions, looking for a daily high or low off daily EMA 12. That's just enough things aligning that I know that's a real high probability trade, and it's been working out a lot in 2021. So XLV, maybe we didn't get quite to 30 RSI, but most of those things were aligning. And we'll see if that marks our daily high or low. Growth names standing out today. So talking the last two videos about keeping an eye on the biotech sector to be a laggard, keeping an eye on XBI to be a laggard to the bigger biotech names like MRNA and PFE that have been extremely strong. And today they finally showed up, confirming the daily trend change with this higher low and higher high. Strong close, 130.50 is the next resistance level. But more importantly, the weekly higher low is now set. So this is the low of the drop, high of the weekly bounce, gave back more than the bulls wanted, absolutely, but it is a weekly higher low. And now we're watching for an equilibrium because of the size of the retracement. Anything under 140, 150 will be a weekly lower high, and we could tighten up on this weekly time frame for another month plus. So into Q4, possible. But the bulls have short-term momentum in their favor. We got an hourly uptrend. We've got a daily uptrend. Nice bottom fish off the low of yesterday. Held that by 20-some cents. And along with that, look at our other growth names. ARKK, solid green day, daily bull break. So we had a daily equilibrium trying to set a weekly higher low. And we broke today. And the weekly higher low is set. So now we're looking back to the high of this bull move, 132.50, as key resistance. Other growth names, Canadian MJ bulls stood out. They have earnings approaching on a couple names on Friday, but we have CGC here and ACB, and they were up, 3 to 5% today. They are a growth name. They're the weakest of the growth names, but a little bit of short covering. It was a little help from both, okay, growth names are going up today, but also some shorts covering before earnings as the shorts have had complete control. And again, when we just start leveling out, see the bears losing some momentum. Who else in growth had a decent day? PLTR was green, nothing too notable. NIO, decent green day. It still has to confirm the daily trend change. Higher low set at 43.76. The bulls must break 46.78 to confirm the daily trend change and set the weekly higher low. So a key resistance level in play there. Semiconductors, looking a little toppy. And again, AMD pulled back today. NVDA didn't. Strong close for NVDA. Let's go back in time. So again, shorter term time frames setting up to position for swing trades. If you'll remember back here, we were looking for the NVDA bounce. And if you go watch the video from July 16th, I'll talk all about it in that video. And we bought the gap down on July 19th, and it was a big win. And for me personally, I knew I did not want to enter that as a swing trade. Obviously, in hindsight, it would have worked out. But for me, it was just, okay, the game plan is this is a 4-hour oversold bounce trade, and when the 4-hour RSI cools off, I will be out of this trade. But I was highlighting, if you want a swing position, this is the kind of setup where you make an entry, because again, it was lining up right off weekly EMA 12. We had tons of space for a weekly high or low. This is where you make an entry and you can sell a partial position. If you enter at 180 on the gap down day, and even if you sell at 185, your break even is now 175. You stick your stop under that low. If that's the weekly high or low off EMA 12 support, you nail it. You can't lose. Worst case scenario, you stop out break even, and the possible benefit is continuation. So here we are up well over 10%. And swing traders going very well. All-time high in play, 208.75, trying to confirm a weekly bull flag. What was I talking about? SMH. So bulls still in control, hourly still in an uptrend. We would have to break the low of today to confirm an hourly downtrend. And then again, lots of space for a daily higher low to form from there. MU's been hurting. No, MU had a good little bounce. MU has a pattern of a higher low every day. We're watching for it to be a laggard. Again, the monthly chart for MU is just fine. And we are now, our monthly higher low looks set off EMA 12. But we do need to confirm a daily trend change. This is just a V-shaped bounce from the low. Bulls are going to be scouting a daily higher low entry. Again, keep an eye out for hourly oversold conditions, scouting a daily higher low. Let's see if we backtest EMA support. And then, of course, we need to confirm that daily trend change to have confidence that monthly higher low is set. TAN. TAN was the one growth name that didn't have a good day today. It has been standing out a bit stronger the previous few days, but today it stood out as a lot weaker than most growth. So daily consolidation underway. Anything above 82.87 is a daily higher low. No bear volume, no red flags on this pullback. And bulls just watching to try and see a weekly higher high. That's not what we're watching on growth. I started last week saying watch for growth names to set our weekly higher lows. And last week they just putted around and formed tightening daily ranges, setting up the weekly higher low. And now it's this week that they are confirming. So now that we have that on most names, we're watching back our weekly resistance. And the question for the next couple weeks is, can we see continuation or do we set a weekly lower high and tighten up? And if that's the case, then we know growth will see volatility into September. Because if we see a lower high set and we tighten up and September rolls around, breaks of these multiple month tightening ranges, we'll see increased volume and increased volatility. Recognizing equilibriums and tightening ranges not only helps you make trades based on their levels, but it also tells you, okay, I'm not interested here, but I'm going to start paying attention when things get tight because I know how these break. I don't know the direction it's going to break, but it's going to break and there's going to be volume and volatility, and that will have more trading opportunity than there is right now. MSOS, so MJ sector, part of growth, seeing a good day today. Keeping this little daily uptrend going. Okay, I see you bulls, you're trying. We have earnings the next 2 weeks. But I just zoom out and I look at anything under 41.39, 10% away as a weekly lower high. And I know that there's still a possibility that we just reject from weekly EMA resistance and see the continued downtrend. So not getting too hopeful. Again, I do have a little bit of a position just so I keep my eye on it. But I need a big enough bounce. You know, if we get a bullish reaction to earnings and we get a big enough bounce to create the space for a weekly higher low, then I start paying attention and giving the bulls some credit. But they don't have any credit at this point. The VIX, tightening daily range, key support 17.19 coming into play. Still in an equilibrium. So that has not broken yet. And that level will be in play tomorrow. And if we hold it, we continue to tighten into next week. The dollar is still working on its daily bounce. Again, it's not a very convincing bounce. The gold bulls really want to see a bear flag here and further downside. Because again, it's still a possible weekly bull flag right now. And we have to see another leg down to then shift it towards a weekly equilibrium as opposed to a bull flag. But the metal's still trying to recover from getting punched in the nose yesterday. And as long as gold is within this range, there's not a whole lot of new information. 1789 support. Bulls can look to bottom fish off that level. But range bound for now. And looking like weekly consolidation may be shaping up. Still sideways, too early to say. We'll see if 1789 support can hold. Silver. So I had this 12-hour falling wedge drawn. And I thought yesterday, okay, we broke bull from it. But then I looked at it on the daily today and said, no, I can leave this up on the daily because that's a rejection. There were no closes above that downtrend resistance line. And if we were to drop down to a lower low from here, I'd be keeping an eye out for a bounce off this support if that bounce off support is still holding 23.78 monthly support. So let's see. If we were to drop straight down here the next few days, we would still be holding that monthly level. So I would consider adding a position if that happened. But I'm going to keep an eye on this falling wedge until it resolves itself. fake out yesterday. Miners continuing to drop down. We had a gap to fill at 34.19. It filled by a penny today. So I would expect a higher low compared to 32.87, at least initially. But it's a weekly bounce. And we did reject from that level. Remember the broadening megaphone here? We're still within this pattern as well. No closes above resistance. Fake out. Oil bounce underway. So we're watching for a weekly higher low to try and form. Let's see a better time frame here is the 2-day. I like the 2-day the best. We're going to stick with that over the weekly. And I'm just viewing it as a high, low, lower high, and scouting this higher low compared to 65.01. The bounce was marked by a 4-hour bear flag confirming with 0 follow through. Back to Bitcoin. And again, this is how you want your brain to work, where you look at enough charts, you see this setup, and it instantly recalls this chart, this happened, this is what it exactly looks like. So I can reference things and see historical examples. But Bitcoin today had a solid 4-hour bounce, not even really a bear flag, broke support with 0 follow through, complete 180 turnaround. So again, these breaks with no follow through, giving signals in the opposing direction, is something to get comfortable with. And it's tricky. When you're first starting out, you're learning key support, key resistance. Okay, we want to hold these levels or reject from these levels. And now you're being opened up to a whole nother world of, wait, we can take those levels out and then that marks the reversal. It adds a lot of complication. So I wouldn't practice getting good at these moves until you have, a year or two of technical analysis, basic understanding down. But these happen fairly often out there, and it is a good thing to be able to recognize. And again, natural gas has that weekly example that marked this many-month bull move. So we need a 4-hour trend change back to the bulls to see our 2-day higher low shaping up. And natural gas keeping its bull move going. Little double top at 421.6. And if this inside bar breaks bear, we scout a daily higher low, anything above 3868. And again, it was the weekly bear flag confirming with 0 follow through that kicked off a 4-month mega bull run. All right, I'm done talking. Do good things. Feel free to ask any questions. Thanks for watching. See you. you